I'd like to get your perspective, Mr. Chukwu, on recapitalization. Of course, you've talked about the role of the banking sector to the economy and market capitalization. What is your take on this? Should we expect recapitalization of some banks from Q1 2024? That's first quarter of 2024.
What I would say, it depends on a lot of factors. I'll try to dimension some of those factors. If you look at the shift we've had in exchange rates, it has become compelling for banks to, the capital outlay for transaction, the ticket value of transaction has increased in the country. It doesn't necessarily mean that the banks are under regulatory capital pressure, but the banks will come under operating capital pressure. Let me use an example. A mid-tier bank will give to a mid-sized oil and gas operator $30 million line. Maybe 2 years ago, $30 million line now amounts to 30 billion naira. To bring in a single cargo of PMS, which is about 15,000 metric tons, will require about $15 million FOB. So if a bank has to fund it, then the bank will certainly require additional operating capital. Another factor you have to consider, so the banks have a compelling need beyond increasing their liabilities, also increase their operating capital because of the shift in exchange rate. And if you recall, the central bank came up with some forbearance to the banks, and they were not definite on the timeline for those forbearance. They said they're going to grant bank forbearance on single obligor limits, non-performing loans, and I say you need to specify a timeline because they have to remedy it. If there's a breach of single obligor limits and you're granting forbearance, then it simply means that the customer has to pay down that loan for him to come within the limit specified by the regulator. And if you don't, there are people who have $100 million line from banks have fully been disbursed. $100 million is how much now? That's 1 trillion naira. Yeah. So what is the capital base of a bank that it can accommodate that? It's not something you grant forbearance. Something has to adjust. And that adjustment can come in form of the customer pays down or the bank increases its share capital. So I think there's a compelling need for the banks to raise additional capital. Other factor you have to consider, which are purely economic, is that the return that the investors make from investing in banks is higher than the return they will make from any other investment option in the country. So commonsensically, it's attractive for a bank, a customer, an investor to invest in a bank shares than to invest in any other aspect. And if you remember the simple economics of dividend policy says that a bank has a conservative dividend policy if he thinks that the return on its internal investments is IRR is higher than what the options the investors have elsewhere, or the opportunity cost of that capital to the investors. So it will have a conservative policy on dividend payment, and therefore it will retain most of the money so that it can invest more and generate more money. And then if it's at the matured phase, it doesn't have opportunities for investment, it will have an aggressive dividend policy. If you look at the Nigerian capital market performance, our share index had gained 30.93%. The banking subsector had gained 60.43%. That's 195% above the share index. Which other investment class will give you 60% return? So, in the direct interest of investors, it makes more sense for them to even give the money to the banks. Because the banks, like Dr. Adedikwe said, look, have the capacity to read the market and then generate better returns even in difficult environment. And it's very commonsensical. If you look at what happened in the past couple of months, Naira devalued, there was no bank, I can't remember, maybe 1 or 2 banks that suffered exchange rate losses. 90% of the banks enjoyed exchange rate gains because they had been projecting it. If you are a CFO in a bank and you had negatively backed up your balance sheet in dollar position, then something was wrong with you. So any good banker would have known that Naira was going to devalue. And therefore they gapped their balance sheet in dollar assets positively, holding more assets than liabilities. So when it happened, they all logged in profit. So my take is that 2 factors. 1, economic exigencies will require the banks to raise additional capital to meet operating cash flow needs because the ticket of their transaction have increased more than what it was. 2, in terms of accruable income to investors, the banks still generate the highest return on investment. And then, if you also look at the weighted average cost of capital, you have your cost of equity and cost of debt. So get your WACC. Then if you look at your cost of equity today, it's higher than the cost of debt. So if the cost of equity is higher than the cost of debt, it makes sense to go and assess the cheaper cost of fund. So for me, the most logical thing for banks is to go and raise additional capital in the coming months. Thank you.